This program is proudly brought to you by Telecom Limited and Daytech.
Good night, Papua New Guinea. I'm Malcolm Waira, and welcome to another episode of Infocus. In this session of Infocus, we discuss Nambawan Super Limited's 2024 financial results. Joining us for discussions is Mr. Paul Sayer, NSL Chief Executive Officer, and Mr. Pochon Lili, Chief Financial Officer. Gentlemen, thank you for joining us.
Thank you. Thank you.
Okay. Firstly, Paul, can you share the key milestones that Nambawan Super delivered in 2024 to enhance member services and investment capabilities?
We've done a great lot of milestones in 2024, and the first one I'd probably want to have members understand and the general public is really around how Nambawan Super was able to resecure the land at what we call 9 Mile. So there's 4 portions at 9 Mile, 2156, 2157, 2158, 2159. It's actually taken us almost 30 years to properly secure that title to it, and so at the moment we've also had to go through what was probably PNG's largest eviction exercise. It went off very well. We're very happy with how that actually went through. It's disappointing for settlers to have to move, but it is actually owned by a lot of our members. 235,000 people actually own that land. So we're quite within our rights as the owners to go through that eviction exercise. So that was one of the big things that's occurred. We then move on into some other areas, things like the development that we put in place for a building. It's in the business and government area, which is called Moki, and that was completed in 2024, around July also, and it was opened officially at that point. That's about 240 million that we've actually invested into that development and building. Obviously that creates jobs for people as we're building it. It's now moved into the phase of tenants coming in. So people are paying rent, and we're looking to secure some other tenants, but that's pretty much full at this point. We just need the people to be fitted out and to move in. So we've received the 9 Mile, we've moved into Moki. We then start to talk around some other things, which is really around the efficiencies that occur inside the organisation. So one of those is really around what we call IDOS. It's a document workflow system. It's a bit of code talking about IDOS and things like that, but it's really around how do members fill out their paperwork, and we move it through the processes and try to move it through efficiently so members can understand that their paperwork is moving along, it's actually been actioned, and for us we've got the right checks and balances as that paper works through. So that's on the member side of service. We then talk around how can we improve what's really some of that back office side, which is around the investment. And so we have what's called an IMS, the Investment Management System. An IMS also assists us with looking at how we make our investment decisions. It talks around and works through how we keep track of some of the information that's required to make the right decisions and to understand what those decisions have actually returned for members or cost members into those particular areas. We then also have things to look at how we improve getting the information from the employer as well as the money. So one of the biggest challenges is that every fortnight we receive money from our members, and it's called, our process is moving to what we call new employer pays. Nambawan employer pays. So what we're looking for is that employers are sending through that information, we're able to receive it, process it very quickly, and allocate money out to the members. So one of the things is to make sure money gets moved into members' accounts as fast as possible so they can actually get the crediting onto their account. So that's an area that we're really excited about bringing on. We're starting to roll that out. So the new employer pay portal was something that was into that particular area. And then we also look at how we educate our members. So a bit different as to awareness. We actually have dedicated trainers that sit down with our members, and we run this financial literacy training, full day courses about things like how to budget, how to get set for a house. We talk to members about retirement if they're coming up towards retirement, thinking about retirement saving. We also talk about how an SME works, and if you're thinking about coming out of a job and thinking about an SME, how to actually set up and run an SME, what's the downfalls and the exciting things that occur with an SME, and thinking about that. So we're trying to make sure that our members actually have more information to make right decisions. We're trying to get our own house in order, making sure that we've got things moving as efficiently as possible, as well as having the right information education to our team. So it's something that we're actually giving back. It's a free course. Last year we had over 7,000 people come through and sit down for it. So we can still continue to look at many more members coming through, and people may come back for refreshers, but also other organisations haven't taken advantage of that free education that's available. So, and that's across PNG. There's something like 22 provinces, and we've been operating out of about 17 with that particular training at this point. So plenty more that we can do in that space.
Now, Pochon, can you give us the update on how Nambawan Super has performed in terms of your membership growth and outcomes?
Thank you, Malcolm. Certainly. So one of the key metrics we look at the fund is membership growth. And the reason we do that is that really the growth in membership gives you what's known as cash flow. And the fund obviously operates on the basis of receiving contributions and then paying out members. But at the end of the day, we need positive cash flow coming in, and that allows us to do a number of things. Firstly, it allows us to make investments, so whether that's domestically or offshore. What it also allows us to do is to put aside cash flow to take care of operational expenses and projects and other things. So year-on-year growth in terms of membership numbers was around 3%, which was around 235,000 members at the end of 2024. Probably I'd like that to have been a bit higher, but look, it's probably a reflection of the current state of play in the economy. I think the consensus is the economy, everyone's sort of in a holding pattern, sort of just waiting for these key resource projects to hopefully kick off, and that will provide the impetus for good growth in the economy, which will lead to more jobs and potentially higher membership numbers for ourselves. So 3%, I'd like to see that go up in the near future. But one of the other things we look at is something called a voluntary contribution. So the mandatory contribution for any employee in an organization in PNG at the moment is 6%. So every fortnight you're deducted 6%, and that's remitted to an authorized superannuation fund. You can choose to go above that 6% if you want, so you can go up to 7, 8, 9, or even 10%. So we encourage our members to do that because, obviously the more you save, the more you're able to take advantage of the positive net returns that all the funds in this country have delivered to their members. So I think both, as an industry, the funds are returning over 25 years, something like a 10%, return, which is great. So the more you save, the more you're able to take advantage of that. So we did see some growth in the voluntary contribution space, around 6%. Again, we'd like that to be higher. The other one is Choice Super. So Choice Super is sort of a niche product that we try to use to capture those that aren't in the formal labor system or in formal employment. So people that are engaged in informal activities at markets, taxi drivers, PMV operators, that sort of thing. So that product is designed to kind of capture those people. So we did see some growth in there, around 8%. Again, not as high as I would have hoped. So we need to probably put some more focus in that area and going forward. RSA is known as the Retirement Savings Account. That's really a product designed for members that are exiting the main fund formally, but want to sort of retain some of the funds back in the fund after formal employment. The advantage there is that even though you've exited formal employment, your funds that you choose to retain in the fund enjoy the same interest that's paid out to people that are still working and in the fund. So we did see around, I think, 100 people choose to do that in 2024. We're hoping to grow that into the future. So contributions really is the cash flow coming into the fund I spoke about at the start. So that was around 961 million kina for 2024. So just under $1 billion kina. So it was good to see that coming. The other side is the benefits. So people leaving the fund, whether that's through a normal retirement. Unfortunately, people retire due to medical reasons or passing away. So we paid out around 700 million kina to those people. I'd just like to stress that 700 million kina is direct cash injection into the economy. So in very subdued economic conditions, we paid out 700 million into the economy. Over the last 2 or 3 years alone, the fund has paid something like 2 billion kina, injected straight back into the economy, which that cash goes into the economy and it gets spent on different things. So it provides a bit of a boost, if you like, for the economy. One of the final things I want to mention is the housing advances. So I think housing advances has been a great product in superannuation. It's allowed a lot of members to secure equity for a house. We paid out around 115 million kina in housing advances last year. So a lot of members advance themselves their super. It's an advance, meaning that you have to pay it back by increasing your contributions by 2%. But the thing I'll mention there is, while it's great that you get a house, that money that you advance to yourself, that's actually out of the fund, and it's not enjoying the interest that we pay annually. So we need to think of those things. So yeah, so I think a year-on-year growth, but hopefully we can do better.
Now, Pochon, in terms of your net asset value, where have you seen significant growth in, and what would you attribute such a growth to?
So really the growth in net assets is made up of two things. So one, your profits or your investment income. And in 2024, the fund declared a record profit of 1.1 billion kina. So crossed that threshold for the first time in its history. That allowed us to pay a crediting rate of 10.5% to our members. So that was done last week, over the weekend. So that profit and the subsequent net assets growth has come really from three things. So the first thing is the fund is heavily invested in state securities, so things like treasury bills and government inscribed stocks. So around 3% of the 10.5% crediting rate came from state securities alone. The other thing was BSP. So BSP for many years has been really a star performer, not just for the fund, but just in general in terms of businesses. So the fund recorded around 3% in terms of crediting rate just from that one asset alone. And there's two ways in which that the fund makes money off BSP. One is through share price appreciation. So we saw in 2024 the share price for BSP increased dramatically. So it went from 13 kina in 2023 to around 19 kina at the end of 2024. And that's around something like 40 to 42% growth, which we've never seen. So the fund benefited from that. Also dividends. So the good thing is BSP also pays a high dividend yield. So the fund recorded something like 0.7 or 0.8% in terms of crediting rate. So all up 3% from BSP, 3% from state security interest income, and the other 3% was from our offshore holdings. So the fund has about 20% of its portfolio invested offshore, mainly in the US equity. So in America, the equities there have seen 20% growth 2 years in a row. So 40% over the last 2 years, which is fantastic growth. So the fund is well positioned, and we were able to gain from that. Just finally, just on the offshore, the other thing that happened was we saw the kina continue to depreciate against the US dollar, and we all know that's because of the IMF, one of the IMF conditions on the state. So the good thing about the fund and the way it's set up is that because we're holding US dollar, when the kina actually weakens, it means that that dollar that we're holding offshore becomes more value per kina unit of currency. So what actually happened was, although the kina was depreciating and domestically it did result in higher prices and all that, the members actually benefited because we were holding US dollars offshore. So that came through in a sort of FX positive variance, which was good. So that added another 3%. So really the returns and the net assets growth came from those three things there.
Would you like to add to that, Paul?
The important thing for us with the returns is that it's been a stellar year we talk about BSP and certainly the offshore assets. One of the challenges that we've been facing is trying to get our funds further offshore to actually take advantage of what we've seen occur over those last 2 years. And we had some access to foreign currency towards the end of 2024, but unfortunately it's very hard for a super fund to be in the priority list to have foreign exchange provided to us. So we can actually move up to about 35%, and at the moment we're holding 20%. And so there's certainly plenty of range for us to get to that if we can get the money offshore. It's not to say that we think poorly of the opportunities in PNG. There's just that there's a lot more opportunities offshore that you can actually look at for investment and diversify the fund, and also have some more advantages in actually accessing what we call liquidity. When we need money, if the money's offshore, we can actually get it back in 3 days. So sometimes it's very hard if you've got a building in PNG to actually go through and find a buyer and sell it and have the money ready in 3 days' time. It's going to take a bit of time to sell some of the more longer term assets. So having that balance between things offshore, things onshore, but also managing when is that cash flow. And Pochon talked about the importance of what's happening with the cash flow, and that gives us a solid basis for us to invest and to try to maximise returns for members if we have a really good understanding and certainty about what we can do with our funds.
Mr. Pochon Lili, thank you for joining us.
Thank you very much, Mark.
Joining us after the break is Nambawan Super Limited's Chief Investment Officer, David Kitchnoge. Welcome back. You're watching In Focus. Joining us for this session is Mr. David Kitchnoge, Nambawan Super's Chief Investment Officer. David, thank you for joining us.
Thank you, Malcolm.
Now, firstly, David, in terms of Nambawan Super's investment portfolio, what investment strategy are you applying, and what is the composition of your investments, both onshore compared to offshore?
Yeah, thanks, Malcolm. That's an important question. So, in terms of the way that we manage our investments, we deploy what's called a balanced fund approach in managing our investments, which basically means that we allocate our investments in different asset types with different investment returns and risk correlations. Essentially, not putting all your eggs in one basket. So spreading your eggs so that you have different risk return correlations, and at different points in time, markets perform differently and different assets react to market conditions differently. So you try and get the trade-offs in the different conditions at the asset class level.
Now, David, given the impacts of the Black Wednesday riots on the economy, which happened last year, how did this event impact your investments, and were you able to adequately recover?
Yeah, that's an important question, Malcolm. So we own a number of investments in the market, and different assets were affected differently by the Black Wednesday event. One of the companies that we directly hold shares in is CPL, and as we know, CPL stores were some of the stores that were directly targeted by the riots. CPL lost a lot of stock, they lost a lot of business, and they booked a lot of losses arising from that particular event. And as shareholders, those losses actually were passed on to us as shareholders, both in terms of low profitability or loss, in terms of their performance, but also in their share price as well. The market reacted to the loss that was suffered by CPL, and the share price declined, and we faced that loss at the fund level, at the shareholder level. One of the other investments that we hold is in Paradise Company, and Paradise Company makes biscuits and chocolates and ice creams. So when the shops were looted, obviously those items were actually looted, and so CPL also ended up facing issues around their performance in respect of the products that they make. SB Brewery is also one of the companies that we own, and as we know, when they looted the shops, the beer section were heavily looted as well, and so SB Brewery suffered losses, and those losses were passed on to us. Not only that, we also own various properties in the market, and when events like that happen in the economy, in the market, it causes a lot of anxiety in the market, and people begin to worry about should we stay in the market or should we not, and so on, and that reflects in the occupancy levels of our buildings as well. So Black Wednesday was a very sad event for the economy, and for us as shareholders, we got the wrong end of the stick on the other side with the impacts that the market felt.
Get your thoughts on Nambawan Super's approach towards unexpected risks that may occur for your investments.
You know, we can't necessarily understand everything that's going to occur in the economy or what's going to occur around the world. And we've seen, you know, in recent times, we've seen a gentleman, the president of the US, Donald Trump, come in, and you see all sorts of crazy things that have been suggested as to how they're going to treat the economy. And as a result, you then see impacts into the stock market in the US. But it's not just into the stock market into the US, it actually ripples around the world. It ripples actually down into P&G, and that confidence around people wanting to invest and where to put money and how are things actually operating. So for us, one of the ways that we try to minimise risk is we think around diversification. We don't have, as David, you know, we talked about earlier, we don't have all our eggs in one basket. So if something is going to go okay, that's great. If everything goes okay, that's good. But if something isn't going so well, then hopefully something else is there to balance it. So in Black Wednesday, what we saw and the results for 2024 really highlight that the economy in 2024 in PNG wasn't really a good year for everything. Yes, we saw overseas actually lift and carry the results for our members. So having that money offshore has actually lifted the performance, given some security that we're actually going to give returns to members, and that's offset what's occurred inside PNG. So it's important that members understand that we're not all just picking one item and backing that one item. We actually spread it around, and also different time horizons. So when we're thinking about when those returns are going to come, I talked earlier about 9 Mile. 9 Mile is securing the asset at the moment, but really the returns will come when we start to look at that pure investment side, when we're actually building and looking to sell and to move into those phases. It's a long time horizon that we have. But also our members, we need to think, our members are probably in the fund for 10, 20, 30 or 40 years. So we don't necessarily need to rush and have something in and out today. We can actually take that longer term horizon, and hopefully we get paid for that patient capital over a longer period of time. And that's what the difference really is in a super fund, is really thinking about long term rather than just what's in and out. You know, people play a stock market, they play it on the day or on halfway through a day or something. We're there for the long term. We're thinking around how it goes up and how it goes down and trying to get that long term return. So that's part of what we're doing to managing those risks. There are things that we do during the year to look at how we balance and how we adjust the portfolios to look at how can we actually take advantage when we see something, or how do we actually, this might be getting too risky, how do we minimise some of the risk and offset some of that risk that's occurring.
Thank you, Paul. We now go for a quick break. Join us on the other side for more discussions. Welcome back. You're watching In Focus. Now, Paul, the state recently amended the Income Tax Act 2025. In addition to other major tax reforms, what is the NSL's position with regards to this taxation on retirement benefits?
Well, we'd certainly welcome what we've seen from the state in making some changes around superannuation. And what we saw was that they have reduced the tax imposed onto a member when they actually leave the fund. And where it's really benefiting members is those members that have been in the fund for contributing for more than 15 years. So at the moment there was a 2% tax, that tax is now 0. So when people sometimes look at the state and they say, look, we're paying too much tax, well actually here's a step that the state has done to actually provide some benefit, true benefit to members. So we've seen that on the withdrawal area, that the tax has been removed for those that are long serving. Also for those members, there's been a bit of confusion at times for our product, the retirement savings account, and understanding how that taxation works in it. So it's there to really benefit those members to leave the money in the fund and draw it down slowly over a period of time. If members in the past drew it down a bit quicker, they paid a lot more tax than what they would otherwise be paying. And what we've seen in the RSA is really they've removed some of that uncertainty and have improved the taxation position so that members only pay tax on some of the investment earnings. So it's a really good initiative that the state has done. We certainly would like to see some more initiatives to continue to improve. Everyone wants to not pay as much tax as they do, and there's certainly some other taxes in superannuation that we're looking to benefit. So working with the state, trying to give them some insight as to what does this actually mean, what does it cost them, because if they're giving up tax, there is a cost to the state. So it's important that we also understand the ramifications on the state and they're actually doing some of those taxation changes. So that's in the income tax. One of the other important things that we've seen during 2024 was really, and I think we talk around the results for BSP, we've seen a lowering and some less tax imposed on the banks. And what have we seen as a result of them announcing that there's less tax on the banks? Well, it means the banks have got more money to give as dividends and to pay out. But we've also seen that confidence lift in share price. So you can see that having taxation implications does actually spin off elsewhere, and for our members to actually understand how this taxation is working and how it actually benefits back to the fund and ultimately themselves.
Now, finally, I'd like to get you to share your thoughts about this. We are on the cusp of celebrating our 50th anniversary. What role do you see Nambawan Super can play in nation building and prosperity in PNG moving forward? Perhaps we'll start with David.
So it's been 50 years since we became independent. In 1975, when we started, we were a small economy with small capital base. 50 years on, we built a lot of our own capabilities, including our own capital base. Since the regulation came into being in 2000, the super funds have grown from just under 2 billion kina industry to now 20 billion kina. So that's a significant capital base, PNG-owned capital base. We are ready to get out there and deploy our own capital to help grow our economy and boost business confidence and so on. What we would appeal to all of us in the country, in the market, is to help improve the operating environment, help improve the investment environment, reduce the risks of doing business, reduce the cost of doing business. So it makes it possible for people like us to get out there and invest in various different assets, various different initiatives in the market to help grow the economy for the next 50 years. So significant capital base, Papua New Guinea owned 20 billion kina, that's a lot of money. It can make a lot of difference if all of us can work together to remove the impediments so that we can get out there and safely deploy our own money to help grow our economy for the next 50.
I think the importance is that, we started 63 years ago. So we started with one person, very small fund, and you've seen that growth. And David talked around us up to, as an industry, up to 20 billion. People also forget that we play an important role into that infrastructure across the country. And what we actually held for many years was actually the water treatment. For example, we invested into the water treatment for PNG. So assets owned by PNG, running businesses for PNG, and then returning that growth and that interest back to PNG people. And that's really what we're about. Certainly looking forward to celebrating 50 years. It's an important occasion to sit there and to reflect, but also then to say, well, what can we do in the next 50? What's the super world going to look like in 50 years? And part of what we've been, pushing for is super for all, that every Papua New Guinean has some sort of safety net. And how can we actually move to looking at having not just those that are in formal employment, but other people are actually able to have access and to get these sorts of returns back into a savings culture for not just those in a formal workplace, but for everyone. And as a result of that, then what are the next things that we can look at? And people talk about housing, we talk about health. Are there other things that we can actually look as an industry and start to think, well, how can we actually expand it? How can we get that savings culture so that people are planning for long term? Having discussions, not about, well, what are we going to do in the next 3 years before the next election, but what are we doing to set the country up for 10, 20, 30 years? What do you really want the country to look like and to have as benefits for people? Now, I'm fortunate in Australia, we have social security, we have retirement plans, we have health schemes, but we can't, that's 200 plus years old. PNG is 50. What can we do to assist in this process? But we also, as David said, we need a really, a confident investment base so that people are able to actually invest with that confidence and know that things are going to come through. We talked about law and order issues impacting directly to members' balances, the returns. So what we want to see is how can we actually do that? We think there's a boom coming. We want to get ourselves set and benefit for everyone while we have that opportunity as it's coming through. So certainly very positive. We need to be also cautious, but we're certainly a positive around PNG and whether we can actually get some of these things to actually get underway so everyone benefits from it.
Mr. Paul Sear and Mr. David Kitchnoge, thank you for joining us.
Thanks, Malcolm.
Thank you, Mel.
Well, viewers, that ends this episode of In Focus. Do join us again next week, Monday, on our regular time slot of 7 p.m. Till then, bye for now.
This program was proudly brought to you by Telecom Limited and Daytech.